Let us recap the information that should be covered in 5 main sections of a DMS document that we discussed in Module 1. Objectives and scope. This section describes the objectives of debt management, defines the scope of debt that the strategy covers, and identifies the costs and risks being managed under the strategy. The sole purpose of the DMS is to achieve the debt management objectives. Existing portfolio. This section provides the context of the existing debt portfolio, which is the point of departure for the strategy. It describes the composition of the portfolio in terms of its main cost and risk characteristics of the debt. This includes the mix of currencies, the mix of fixed rate and variable rate debt, the maturity structure, and the mix of creditors and investors. The drivers of past trends and key changes over time should be explained. This section also highlights the key costs and risks that are to be managed. Debt management environment. This section describes the environment that the debt manager faces, including the availability of financing from different creditors and markets, and the outlook for interest rates and exchange rates. It describes the fiscal outlook in terms of the implications for the borrowing requirement. Constraints on policy choices for the debt portfolio should be discussed, including those related to domestic market development and shifts in the availability of different types of external financing. Analysis. This section provides a brief explanation of the types of analysis, both quantitative and qualitative, undertaken to support the decision on the approved strategy. Any limitations of the analysis should be identified. It is not advisable to describe the various alternative or hypothetical strategies that were considered or underlying quantitative analysis. If it is decided to disclose those details, this should be through a separate document such as a technical working paper. Debt strategy. This section explains the strategy that has been approved. It identifies the key elements of the chosen financing strategy and describes the composition of the debt portfolio that would result over the medium term from the implementation of the strategy. It should provide the rationale for the desired composition and how it will be achieved over time. This subsection specifies ranges, targets, or desired direction of the cost and risk indicators that are being addressed by the strategy. Arranging the strategy document as described here and in Module 1 helps to ensure that all relevant stakeholders understand not only the debt strategy to be pursued, but the key objectives that guide it and the main features that have been taken account in its development.